Hello everybody, SpyderCrusher here, and this is a breadth and market update for May 16th, 2011. So there's a couple things that are interesting about breadth right now that I thought I would make a video about rather than just a straight static post. First thing I want to point out is that I count breadth in a number of different ways over different times. So one of the ways I do it is per week and per month. And one of the reasons why this is helpful is because there's well-known effects that the first day of the week and month have when determining inflows and I guess outflows too. And that's partially just because of scheduling, like when companies do their paperwork, when fiscal quarters begin and end, and so on and so forth. So however that affects the flows of money, which is important, is somewhat incorporated into the system because it resets at the beginning of the week and the month. By virtue of it resetting each week and month, you're implying that there's a weight to the first day, because since I use a majority rule system, if on any given first day of the month there is a very minor sell-off, that could be enough to majority rules the system into flipping bearish. And typically most people say, why would you get bearish if there wasn't a strong sell-off, or why would you get bearish if there wasn't strong price action? But what my system is doing is weighting negative first days of the week and month slightly, in that favor. And I think the results, which have been, really great over the last 15 or 16 months that I've been publishing them, speak for themselves, and that's not a bad approach. Obviously, there's other approaches, but I think this approach works great for me. So, the last bearish signal occurred for just that reason. If you look at the cursor and look all the way down, you see it says 5.2. Here was 4.29. So this sell-off was one of the bigger sell-offs we'd seen since right here and right here, if you just look at the size of the red, but it wasn't enough even to change price action, which was still lime green. The actual price bars are coded off something separate than what these are, just to help. So anyways, it was the calendar first day of the week effect that switched these things negative, and now we've had this subsequent decline. So it was a great call, and I'm really happy that anyone that listened to it theoretically has not been buying into what has been a bad tape, and that's the point. It's very easy to trade long momentum stocks from here to here, but all of a sudden you lose all your profits here to here, and that's why this tool is designed to keep you out of those bad situations. Same thing with over here versus all this noise. So what's unusual about this particular sell-off? Well, it's occurred on much higher volume of selling than a lot of past sell-offs. So the last sell-off we had, which took us from a high of 218, or on 218, excuse me, down to a low on 316, so it lasted about a month, and also, was pretty sharp in its decline. It's coincidental that this sell-off culminated on March 16th, and today we are on May 16th. So let's look at the statistics using the crosshairs and looking to the left about what the monthly sell score was at that time. So keep in mind, this was the most extreme day of the sell-off. It was the last day of the sell-off, and then we bounced. So it should have incorporated all the peak selling, and it did. So what do we see at the monthly sell score to the left on this particular day is that the sell score was 1.17K. And it finished the month at 1.45K. So it only added, 300 more points of selling in 2 weeks compared to the 1,000 that it accumulated in the first 2 weeks. So I hope you see how that works, and that we're exactly in the middle of the month, just like we are now, and this was the last day of the sell-off. So the peak strength of the sell-off, more or less, was 1.17K, which you can see to the left. Now, what's the sell-off reading as of now, mid-month, May 16th, the exact same time? 1,000. And what's different? This does not look like the end of the sell-off. This bar right here, if I just had to guess, looks like one of these bars over here, and that there isn't these big capitulative, like spike low or rebound situation. So I find it very unusual that right now the market has experienced as much selling month to date as it did at the trough of the last sell-off. That means this sell-off has a lot more selling power behind it, which you can clearly see in that we've only gone down 2% or so from the high and the bearish call, and yet we've already seen a lot of distribution in the market. So I think there's a lot of room to still be very cautious and very particular about trade. I mean, I'm in like 99% cash, and I have no problem with that until we get some green arrows and the tape picks up and momentum setups start working again.